Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, June 23rd, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. One thing you'll notice right now is the uptrending market. This is something we talked about yesterday in the pre-market video, how this has a nice channeling behavior and how price had been coiled up here toward the bottom of this channel. Typically that leads to an upside break and continuation. And after price failed to stay below the previous Friday rejection day midpoint, that was the point that we mentioned was the important level yesterday, 3100.75. If price were to close below that, perhaps bears may be able to push it down to recent lows. But if there was a close above it, that would suggest a failure. And now we may be looking at the beginning of what becomes a major squeeze ahead for these markets. We could be looking at a significant move over the next 1 to 2 weeks to the upside if today continues to play out in the manner in which it has already. The overnight shakeout down to about 3060 this morning was significant. I believe on comments by Mr. Navarro, which Trump then corrected via tweet, and that led to a major turnaround. That shakeout right there, right to the previous week's close and also to the previous month's close, was majorly rejected and defended. And right now anything above 3100 suggests more upside to recent highs at 3230, and then perhaps way beyond that into the 3400 level and new highs heading into the end of the quarter. So this could be significant with today's move here. Again, if price can continue to hold these gains into the close or perhaps surpass these gains by going into the 3160s or beyond, we could be looking at the beginning of a significant breakout move to the upside. Okay, let's take a look at the NQ. The NQ right now is stuck at highs within a 5-hour range right now, building energy. This one also has a significant look to it in terms of the breakout potential. Here we are showing an ascending pattern here. We had major compression that had built out over the last few days. You can see it down here on a 4-day range basis, compressed below 65% of ADR. That suggests we could have a move of about 700 points to come. 700-point move could be ahead for this index. Now this is the breakout bar here, and you can then measure from this low. That low today is 99.70. You can then measure 700 points from there. That takes you to about 10,700 as the upside target. Perhaps this outside bar here was the low, so you could perhaps measure from that low as well, and that'll probably get you the quicker reading. Yesterday's low being 98.43, call it 98.50, plus 7 there gives you 10.550. So 10.550 could be the next easy target above based on average daily range and yesterday's low. Additionally, if you look at this key range right here that is developed, that key range here, we're getting an upside break to the top, which is 10.155. The first target is 10.550. The final target would be 10.943. So those would be the two upside targets here over the course of the next 1 to 2 weeks. Again, a major breakout could trigger a major continuation here, especially after a compression here and the uptrending channel finally breaking that ascending wedge to the upside. Okay, let's take a look here at crude oil. This one up right now 2% at the moment. Again, another buy the dip opportunity right here coming into play. Tremendous move off the 34s, and we've now seen a big phase of expansion to the upside here above 40s now. 40 very important. You can see again that every time price gets to or below that 8-period average, it has been very bullish each and every time it's come into that zone. Now that we've come away from it here, we're breaking also through an ascending wedge, and a major continuation could be seen. When we talked about this one before, we mentioned the narrow 3-day range here. So if we make this 3 days and drop it down right here, you'll notice this 3-day range right there was compressed very compressed right there, perhaps not against the average, but very compressed. We were looking at least a 5-handle move here on a breakout. And so far, we haven't quite gotten that. So far, we've gotten about 4. Actually, it's not that. It's about 3 handles of range right there. And so we have at least another couple handles to go. Again, after breaking through the upside here, we still have at least 2 more handles to the upside. So that means 43.50 could be next. And again, from the low of the month, here, the average monthly range would take us to a primary target zone between 43 and 46 based on 10-month average. All right, lastly, let's take a look here at gold futures. This one's up about 0.4% right now. This one continuing to hold around the 1770 zone, is just below 1775 right now, 1774.50. Finished with a doji day up at these highs. That's very similar to what happened here before it rotated back down. Again, if the market is going to trigger an upside break in continuation, the ES, NQ, YM as well, then perhaps gold may see a counter trend rotation here against that move. And again, this would be the spot to do it. If you take a look here at the top of the range here, we have a very, very good rejection that could begin if it can't get above 1775 and stay there. We could return right back down toward the bottom of the range between 1670 and 1700. Again, an upside break takes us to 1831 to 1957, but right now this market has to prove it can stay above 1775. All right, that's it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.